Good evening, friends. You might have heard people saying about swing trading. So, what is this swing trading? So, if you buy a stock today and sell today itself, then it is called intraday trading. And if you hold a stock for more than one day, maybe you are holding that stock for a few days, or maybe a few weeks, or maybe for even a few months, then it is called as swing trading. So, it is a short term trading. So usually swing trading is based upon technical analysis. It's based upon charts. But even if you do the fundamental analysis, if you using fundamental data, then also it is called as swing trading only. So by swing trading, you can take advantages of some of the news related to the stocks also. Then it will be the swing trading based upon fundamentals. Every stock of a company has a share price movement. For example, the share is at rupees 140, then it's go all the way to rupees 210. It makes a high of yearly high of rupees 210. Then it comes down to rupees 170. So in this price movement, you will not get all this swing in that stock price. So let us say you buy the stock at rupees 160 and you sell the stock at rupees 200. Then you will be making a profit of rupees 40. So out of this movement from 140 to 210, that is a 70 rupees swing, you got or you earned rupees 40 of that swing, and it will be considered as excellent. Let us take another example. So you bought that stock at rupees 180 and you sold at rupees 200. So you got a swing of rupees 20, and this will be considered as average. So how good trader you are depends upon how much swing out of the total swing that you get from that stock. Usually swing traders make use of the charts. They make use of the technical analysis. So there are various types of chart patterns, and based upon that chart patterns, they try to predict the future movement of that stock and they take positions. So they might take long positions and also they might take short positions. So in futures, it is possible to take short positions and carry that position for a period of 1 month. So short selling is also possible through swing trading. But it doesn't mean that swing traders do not make use of fundamental analysis. They can make use of fundamental analysis. For example, if a company comes up with quarterly results, if the results are good, the swing trader may go to buy that stock. Because if the quarter results of a company are good, usually the stock price of that company goes up, and the swing trader will take advantage of increase in the price of that stock. Just like intraday trading, swing trading also carries some kind of risk along with it, because you are usually taking a future position in swing trading, or else you are taking a margin position. For example, some of the stock brokers offer e-margin. That means you're allowed to carry the position for 30 days. That's usually amounts to 1.5 months. So if you don't settle that position, that means if you don't come to profit within those 30 days, then you will have to incur losses. In case of futures, the time period will be even less. It will be less than 1 month, and if you don't get the price that you want within that 1 month, you will be incurring losses. So for less experienced traders or less experienced investors, swing trading is not so advisable. So if you get enough experience, then only you have to go for swing trading, because there is risk involved. For example, you buy the stock of a company and you come to know that the CEO of that company is involved in some kind of fraud, then the stock price of that company will go down. Then you'll be left with no other option than to book your losses, because you cannot hold on to your position for a very long period of time. Means you cannot hold on to your position for 1 year or 2 years, something like that. So what you have to do related to swing trading is that you have to do in-depth analysis of the stock that you're buying, and also you have to do the analysis of the global environment and also about the Indian economy, because the macro factors also influence the stock price of the company. So you should follow how the economy is doing, what are the GDP figures, what are the tax collection figures, and also the US markets, how the Dow Jones is doing, how the Nasdaq is doing, The Nasdaq and Dow Jones are the US indexes. Nasdaq is especially filled with tech companies of US. So if you do this macro environment, it will help in your swing trading. Thank you.